down. What are some benefits of investing out of state
Mhm.
versus locally?
The local government, the state government, whatever it may be, maybe they're offering incentives to bring you in to do these deals, like to add housing, where locally, maybe they're not, maybe they're okay.
Hello and welcome to another episode of Real Estate Roundtable with MRTG Capital. I'm Tom Goodge, and as always, I'm here with my friend and business partner, Mr. Mike Rohm. How's it going, brother?
I'm doing great. How are you doing?
I'm doing great too, man.
Good.
Doing great.
Good.
So I was thinking about this one for today. I was like, you know what? A lot of times, I think there's a little bit of a stigma associated with, like where you invest at as a, real estate investor. And I say stigma because this is coming from some meetings that we had with some of our bigwig investors, right? More often than not, they're saying, hey, are you investing locally? Or, where is your sphere of investments at, so to speak? And a lot of times people feel that, hey, if you can go touch it right then and there, that you're like, hey, that will be a good investment. That makes them feel comfortable. But today I want to talk about what are some benefits. Let's flip that upside down. What are some benefits of investing out of state versus locally? Because I think, especially with our background and everywhere we've been at this point, we can rattle off a lot more to kind of debunk that you have to invest locally.
Right. Absolutely. Locally, there's only so much inventory, like you said, that little
right out of the gate. Yeah.
There's only so many properties you can go after that you can reach out and touch. And everyone gets scared because of the unknown. What if something happens at that property that's 2 hours away, 3 hours away, whatever it may be? That's why you have checks and balances in place. You have your local team who's in that area. You have the contractors for those reasons and on call. So, there's nothing scary about it to be able to. But the benefits, I'll just,
they're vast. But I want to hit on that real quick. So you said team, right? And that's one thing that any real estate investor, right? Any syndicator out there, but any real estate investor in general, worth their salt, that's their mantra, right? Like they're not going anywhere without establishing a team. And let's peel that back a little bit. What does a team look like, out of state and locally? It's all the same, but what does that look like?
Yeah, a couple. It could be handy people that can do plumbing, electrical, light construction, whatever that may be. Now, it might be specific plumbers that you have handle just plumbing issues. Same thing with electricians. Again, you still want a general contractor who can do, somebody breaks the door lock, whatever it is, they can change those out. But again, the property management side of things, that's where you hire the right people in that aspect. Now, in our case, you either have people on site, which is nice. They live there. They handle the phone calls, the close things, that they can handle. Somebody locks themselves out, they go unlock it for them. You're not calling somebody from an hour away to go unlock a door just because somebody ran their garbage, out to the dumpster and shut the door and locked themselves out. So the local property manager, people on site, whatever that may be. So that's the first aspect of the team. And then you have these skilled trades that you build out that are on call. Again, not every one of them is going to be available 24/7. So that's why it's good to have a couple relationships. If something happens, hey, if these two plumbers are busy, we have the third one who we still keep able to supply work to, so whenever you have these big complexes, that happens. And you have to have that team built out of who are you going to call first, who's second, who's third, and down the line.
Yeah. And even this is one for us as well, right? Before we even go on site, and before we have a property locked in where we're even talking property management and making those connections, which making property management connections happens almost in parallel when we identify a market is one that we want to invest in. But in addition to that, team members include real estate agents, real estate brokers, right? But also local government officials, things of that nature. Because one of the gripes that people have be like, oh, how are you supposed to know what that market is like? How do you know the market trends from there, right? And I can appreciate that, one, the answer is there's lots of data that's out there that we study ahead of time, there is plenty of that we dive into. But a lot of times not even the gripe I'll say, but just the thing that they're trying to poke holes in is they're like, well, how do you know? You didn't grow up there. You don't live there. How do you really know? And then that's where we are building relationships, not just with the real estate agents who will know, who are local, but then also local government, locals that are on ground that can help usher in those connections and have those discussions to really tell us what's going on in their market.
Yep.
It's huge.
And part of that too, like you said, real estate agents, being a realtor here, I know who to call on locally if something happens. I have kind of a Rolodex of contacts. And that same thing with whenever you're out of state, you built those relationships with those agents and brokers. You can call them if you're having a tough time with your other regular people. You call them and say, "Hey, who do you recommend for this?" They will have people in that area who can assist you. So that part of it's not a tough thing, and that's building out the relationships. Another one while you're talking, I remembered was even the grass cutting, the snow plowing. Depending what climate it's in. Because one thing, the stigma or whatever you might hear, whenever you see a rundown property, they're always, talking to other areas, they're always like, "Oh, that's an out of state owner." Well, that's because they're not taking pride in their community.
Exactly.
So
exactly
having these people in place, having those grass cutters, the plowers, whatever it is, keeping it maintained, keeping the local people painting, if there's, I don't want to say rotten wood, but paint chipping, whatever it may be, just keeping the aesthetics up of it really goes a long way. But that's the bad side of people always say. They're like, "Oh, that's an out of state owner." You talk to them and it's because they stop worrying about their asset.
And yes, I mean, just like with anything in life, there are plenty of people out there that look, to do something like, real estate investing. They're like, "Man, I watched an infomercial, I saw Tom Goodge and Mike Rohm crushing it. So I went out to do it as well." But they didn't want to do the work, right? They liked the idea of investing themselves. But at the end of the day, they found out it was a lot of hard work.
Yeah.
And that's why we do what we do, right? We provide investors a way to invest passively in an asset and make great returns on their money without having to worry about the tenants to turn over and all that good stuff.
Yep.
So with that being said, though, when you think about, and there's other topics I definitely want to make sure that we hit on, but you hit on something there clear. Like when you talk about being an out-of-state investor, it's very easy, right, to be checked out and just say, "Hey, I got mailbox money coming in," and let the place, go down. But when you have a great property management team in place, I mean, we're living in, in the day and age of apps, right? And what we have, I mean, this is every day, right? We have videos coming in, that's saying, "Hey, let me show you what this installation looked like. Let me show you what this contractor did. Hey, let me show you, Mike and Tom, what this turnover looks like now. Hey, the room looks great. You can give back their security deposit."
Right.
Like, it's a very simple thing to handle, right? And you're like, "Hey, you have a property, looks great. Hey, did the grass cutters come, on time? Hey, Mike and Tom, want to let you know that, hey, they didn't come on time, or they did, but they didn't actually cut. Want to show you what that looks like."
Right.
And let's make sure it gets handled. But little things like that, those are things that, we take care of. And we don't have to be, we can be hours away. We can be half a country away, and it can still get handled very well.
Absolutely. And we've been tested by some of these local contractors and what we've moved on from them. Because like you said, the grass cutters, the one time they just ran around, they cut the grass, they did the riding mower, they did the push, didn't weed whack. Well, they still wanted paid as if it was the full job. They think because we're out of state or out of the area that we're not paying attention. We're absolutely paying attention, as same as our property managers are, because they're taking pride in that community because they're living there. So, just because
100%.
we're not in that area, we're still taking ownership and having these things done. So again, there's a long list of people who are ready to work and willing to work. And a couple bids we're trying to get. You throw up an ad, get the phone numbers, and you just talk to them. Now today, I know we talked to a couple people about some work that we need done outside of our network, because our guys are busy. The one, I think two of them, one of them told us mid-November, the other was November. It's like, we need this done in 3 weeks. So it's like, all right, we had to start reaching out to outside resources and, talking to some of them on the phone, that, hey, that's not going to be a fit for what you're looking for. but that local aspect of having the property managers and the tenants, the tenants will freely tell us if something's not right. They say, hey, we know you're
Without fail. Yeah.
yeah, we know you're spending money on this service for them, it benefits them. um, and it's not like we get the grass cut every 3 weeks. It's every week that we have it done, because we want them, we want it to be nice for them. We could easily save money and have it done every 2 weeks, 2.5 weeks. um, but that little bit of cash flow that comes from us makes them appreciate that community even more. So they will tell us if something is not right. And that's how we found out that, hey, they cut the grass, they just didn't weed whack around the curbs or anywhere else. Hey, thank you. We'll have the discussion with the professionals in that area.
Yeah, absolutely. Now, another thing, when you as the investor are looking at a deal, right? Obviously, you care about the higher return on your money, right? Whether you're looking at the average annual return, whether you're looking at the IRR, which measures over time, whether you're looking at the equity multiples and hoping that it's a very short, return from a money perspective for the higher equity multiple, whatever it is, right? Ultimately, you're looking for the best return on your investment. And one thing that we'll say from investing out of state is that you can control and look and have obviously a wider range to look at for the actual the rents, but then the price per door, because there are plenty of areas where you'll have lower rents and the price per door, it could be comparable to an area with higher rents. Right. And when you're just investing locally, you are not held hostage, but you're held to the rents that you have locally and what the market trends are that are driving the price and the capitalization rate of the properties. And what we have found, especially in other areas, you can find in this case as well, even lower prices per door than we have locally, and significantly higher rents, where you're like, well, wait a second, why wouldn't I want to invest there? So when we're looking out of state, because we're obviously looking for our investors, right? We want to make our investors the most money. And if you can make more money and then obviously figure out the challenges that come with, long distance investing, which in today's day and age, even if it's 2 hours away or if it's 20 hours away, I mean, you still don't want to be living there to have some semblance, of a life, right? Yeah. It's a problem if we're the ones turning a wrench for you. That would be a big problem, because that means we don't scale and we're not getting you another property to invest in. Right. So our processes, our procedures that we have in place need to work, down in Florida or Texas, over in Utah, wherever it is, it doesn't matter. They need to work everywhere. And then you can go anywhere.
Absolutely. And I know you touched on it. With those communities, maybe it's a cheaper price per door and higher rents, whatever it may be. But our communities around here maybe aren't growing. Maybe they're just staying stagnant. Population is staying the same or going down. Maybe a plant shut down and jobs left. Well, on the reverse side, they went somewhere. Maybe it's a community.
That's right.
They're building that plant. Maybe it's Amazon. Maybe it's something else. Well, they don't have a need. And if we're going to talk about motel to long-term apartment living, conversion wise, maybe that's what they need. Maybe they don't need the transient motel anymore, and they need long-term living because this plant is coming in, whatever the factory's coming in, Amazon, whatever it may be. So if you can hit that at the right timing before, where, all right, now they had a vacant building for that community, now they're going to have growth coming up. So that's why the out-of-state portion is huge, because other businesses are expanding everywhere for, maybe it's for tax benefits, maybe it's in an opportunity zone. They're leaving, we're possibly being local here and going somewhere else. I mean, we see it all the time locally. Businesses will leave Allegheny County to go to Westmoreland for a 10 to 15 year tax break.
That's right.
Vice versa. They'll, at the end of that, they play games, not really games, but they're strategic about it, because at the end of those 10 to 15 years, you see them go back to Allegheny County because they cut their taxes for the next 10 to 15 years. So this is happening on a big scale, that we're looking at these pockets of out of state. Where is the need for housing? Where has the growth? We're not looking at places that in 2018, 2019 dropped 50% of residency. Obviously something left there. There's not a need. Why would you go and invest there? We're looking for the places that maybe it hasn't even had growth yet. From 2020 to 2023, maybe it's stagnant. Maybe it's 1% to 2% up, maybe 0%. But you see what the future brings. Maybe there was news reports of, this whole big factory coming in. I mean,
yeah, and for us, whether it be Amazon, because Amazon, everyone knows, everyone I think has a story about, hey, Amazon's going to go X, right? Like right. They're literally everywhere, which is awesome because once again, that brings that. Yep. But you're just, an area, especially for us, for doing motel to apartment, conversions, that is one where, when you're stuck to your local area, there's only going to be so many motels that are available. Right. One, but there are plenty of areas across the United States that have, we'll say, concentrated pockets that did make sense at that time for lots of hospitality. But when that becomes overcrowded, because you will find that there will be way too many then hotels, newer hotels come in, and then you have, a saturation that makes it so that there's a lot of vacancy in a lot of those buildings. And once again, it doesn't need that much hospitality. However, they're just one hospital being built, one Amazon factory being built, insert warehouse, insert whatever it is, from needing one university being built, from needing a lot of housing.
Right.
And then that's where we come into play. And it's not because the place looks nice. It has to have a need.
Mm-hmm.
Right. But when you look out of state, you have the ability then to say, okay, let's look at all of these factors. What are the rents? What's the need first and foremost? Do they have, buildings that we can convert? Do they actually have inventory? What does that look like? And when all of those hit a home run, then you just figure out how do we handle it, right? Like at the end of the day, like those are just solvable things. You need to get a good team in play. And when you go and you check all of your boxes and you do your due diligence, then we can go back confidently, to you, the investors, and say, hey, we have this great deal. Here's exactly how we're going to get cheeks and seats. There's not going to be a lot of vacancy because of X, Y, and Z that we've done. It's going to be a great place for them to live because of this team that we've built, and so forth and so on. So yeah, absolutely. That's huge.
And part of that goes, like you said, the local government, the state government, whatever it may be, maybe they're offering incentives to bring you in to do these deals, like to add housing, where locally, maybe they're not, maybe they're okay. Again, in Westmoreland County, we know there's a 10 to 12 year backlog on housing. Once you get a voucher, or that's how long it takes to get a voucher. Other states, Westmoreland County is not giving incentives, anything like that. Other states are willing to do that. So it just depends.
They're like, hey, we don't want to have this backlog. Please, bring housing.
Help us out. Like ultimately, it brings tax dollars to the community. Yeah. They bring renters there that came from the outside. They bring you in, they bring renters, whatever it may be. So it benefits them in the long run. So maybe they give you a tax break, a tax deal to go ahead and put that sprinkler system in, or however it may be. But you're going to get those out of state or out of region compared to your local government. Again, it may be available locally for a small portion. It's going to happen for a little bit of time and then it goes away. Same thing with the state side things. You can benefit from that going out of state and getting these incentives, which ultimately makes your complex that much more desirable, for the renters.
Makes it more desirable, but then from an investor standpoint, right? Anytime that we're able to lower our initial price point for certain items, there's always a need for investment dollars to be used. But having those dollars work for you then, and then everything that is increasing that value that makes your investment go further, that in turn, when it comes time for us to cash out, refinance, or to exit the property, your equity multiple is going to be significantly higher.
Absolutely.
Your internal rate of return is going to be significantly higher, which would be pretty fantastic. Those are the things that we look at. And that, in a nutshell, is why investing out of state, is great. And it's not something to be looked down upon, but, it's, hey, what is your out of state strategy should be the question.
Right. And we have pockets of investors that are in different states too. So if we find something close to them, like you said, about us reaching out and touching something locally, our investors are able to reach out and touch locally to them as well.
Yeah, that is one thing that obviously, some of you watching, depending on where you're at, we're located in Pennsylvania, then we know we have a great, group down in Louisiana, the great state of Louisiana. but we do have, investors all over from Florida, et cetera. And yeah, if we can get something in your backyard that you're able to take a look at and be like, hey, I own a piece of that property right there. That'd be awesome. Right.
And you guys have those relationships with those local folks who possibly are willing to sell, in the market to sell. Maybe they're not thinking about it right now, but 6 months they are. Those relationships we can't build with those sellers until we know it's for sale. You guys might have that on the back burner because that's how us talking to the local governments, they know and they have told us about other properties that are for sale. So they say, hey, did you talk to this person? We have not, because we didn't know that was even a possibility or it was in their mind to sell. So they know of those off-market deals, just like you guys potentially do. So,
that's right.
Reach out, let us know, share that contact information, and we will gladly reach out to those sellers and not. Those are relationships you guys have built.
We'll be on a flight on Saturday. Just let us know. We'll be there in a jiffy too. So awesome. Well, hey, we appreciate you. Thanks again for stopping out to another episode of Real Estate Roundtable with MRTG Capital. As always, stay invested and stay informed. Till next time. If you would like to connect, please head on over to mrtgcapital.com and request time to meet with us to answer any questions you may have about real estate investing through a syndication. We partner with small groups of investors just like you, and we're always reviewing deals that could be of interest to you.